On this episode, Rob and I discuss the FTC, the stock market, and how much blood is flowing in the streets. This is Industry Relations, a podcast that's at the intersection of real estate and technology from an insider's perspective, with Rob Hahn and Greg Robertson.
Hello, everybody, and welcome to another episode of Industry Relations with Rob and Greg. This is your co-host, the Notorious Rob, R-O-B. And with me, of course, as always, is the fabulous Greg Robertson.
It's growing on me, Rob. Hola.
I'm telling you, man. I've named you. I've given you the nickname, the fabulous Greg Robertson. But I think we need to come up with it can't be GRG, can it? Fabulous GRG? Fabulous. Do you have a middle name?
Bruce.
There we go. Bruce. Wow. Okay. GBR.
Scottish, right?
Yeah.
No. Yeah, I
can just call you Greg the Bruce. You know? Anyway, how the hell are you, man?
Good, man. I mean, here in corporate world, it's getting close to the end of the quarter. So, there's deals flying across the desk. We're trying to get done and move and groove and shake and bake.
And just to make sure, because, we talked about, I think, in the last episode about all the layoffs in real estate. You guys are fine, right? There's no announcements coming from Lone Wolf?
Oh, no. I mean, anything's possible with anyone nowadays. Who never knows? But yeah. I mean, I think there's so much sunk cost here as far as buying everything they did last year. They need to get all this together to make it work. So we're hiring. I was working with Melissa King from Compass. Yeah. Or not Bright MLS. And she actually got a hold of a list of the talent available from Redfin.
Oh, wow. Okay.
Right. So we're hiring here at Lone Wolf. If anybody wants to go to lwolf.com and check that out. And if you go to vendoralley.com, you'll see a list from the recent Redfin layoffs. And there's a lot of talented people there. And I'm hoping the industry that and maybe hopefully we might be able to get a hold of the Compass list. But I'm hearing, they're trying to do their own helping out those employees as well. So that's fantastic. That's up. Yeah.
That's right. See, here we go. Industry Relations and Lone Wolf making a difference, to the community, because we know you're all about the vendor community. So in any event, hopefully, it would be nice if we could just spend an episode just talking about happy things like that. But I don't think that's in the cards for us, just given what's going on.
Yeah, I mean, I was looking, I have on my iPhone all the kind of different real estate stocks, right? And, looking at those.
I saw it. It was amazing.
And I just took a snapshot of that and put it on the blog. It was this was Monday and it was brutal. Yeah. And now it's beyond brutal. I mean, we've been in a bear market, I guess, for 5 months, they're saying. And I don't know, which way to go here. I mean, it's unimaginable, really. And right before the Fed raised it, I think 75 basis points.
75 bips.
Yeah. The Compass and Redfin announced some layoffs. So, and that was supposed to be like 50 basis points, but it went to 75. Yeah. So there's a little controversy there. And I mean, just a brutal week for real estate. And my heart goes out to not only the people that get laid off, but I mean, a lot of these companies, you have, options and equity in, right? So, that, and everybody's 401ks and, I mean, it's horrible. It's just horrible.
Yeah, no, it's not great, but, depends on what happens in the next 6 months, a year. Like, I don't know what the time frame is, right? Because there are two minds around this, right? There's a group of folks, economists and Wall Street people who kind of feel like, you know what, if we're going to have this pain, let's just get it over with. You know what I mean? Like they want the Fed.
Give us the worst and just start from the bottom.
Rip it off. Right. So they're kind of like, they want the Fed to do like 100 basis point hike or 150, just like really just bang, let's just get it over with. Right. And then there are people who are like, we need a soft landing, blah, blah, blah,
Yeah.
I think my own position on this is complicated, and we've talked about it a little bit in the past. I don't know. That's a whole. We need to bring an economist on or something, or a legitimate Wall Street analyst to.
Why would we need somebody with real facts? I mean, I think that would just ruin the conversation.
I got real facts, man. It's just the interpretation of those facts is where the difference applies. But in other bad news or interesting news, and I think that's kind of what I want to talk about today, is there's some movement at the FTC.
Yeah.
And you sent me that article. So it's going to make some changes. I think it's going to make a difference. So what happened, Greg? What do you?
Well,
I know people can find
article. Yeah, I think a Bloomberg article about Lena Khan, who is the wonder kid of the Biden administration, that did a memo on, and I think we've talked about her in the past of kind of redefining the word monopoly as it applies to modern tech, and basically the article saying is like, listen, she has a big agenda. Biden's put out there an executive order for stuff, but she's got limited time because, if the House or the Senate flips to the Republicans or both, she might find herself, kind of neutered a bit, right? So, and in this article, it lists off a lot of the things that have been on the Biden's agenda and her agenda to kind of transform, Amazon being one of them, big tech as being a big part of this. But what I thought was interesting is nowhere in the article did it talk about the real estate industry, right? I thought, okay, well, maybe there's kind of this confluence of events where you have a shift in the market, right? A lot of people I'm talking to, it's, no more multiple offers. They're actually, agents are actually calling their agents who visited the open house, which never happened before, right?
Right.
So NAR might have missed a bullet here, right? Because she's only got a limited time, that they're saying left to kind of enact some things. Maybe real estate doesn't hit that list, and the market's shifting where everything is like, well, what do you mean? It's tough to sell houses, right? Buyers agents actually are providing a service here. So I think, you can say bad news or whatever, but it might be just a great news for organized real estate to keep it status quo, I would say.
Okay. Walk me through that logic.
There's the long pause.
Yeah. Walk me through that. And the head tilt for people who are like, walk me through that logic.
Well, I mean, famously,
actually,
there was
before you walk. Yeah.
Okay.
Hold on. Before you do that, let's actually share this with the audience because I do think it's worth looking at the executive order itself that you're mentioning. So this is the Biden executive order on competition, right? And you're right. I mean, mainstream media paid zero attention to this, right? But when I read through this thing, I'm like, okay, Section 5, further agency responsibilities under 5H, and I've highlighted it. This is literally what the language says, right? Address persistent recurrent practices that inhibit competition. The chair of the FTC, that would be Lena Khan, right, is also encouraged. And I always thought it's funny, like whenever there's an executive, it's like encouraged to, like that. It's not an encouragement. Like this is the president speaking. This is an order. It's an executive order. You're going to go do this, right? To exercise rulemaking in areas such as unfair data collection surveillance practices, unfair anti-competitive restriction, third-party repair, self-repair, unfair anti-competitive conduct agreement, prescription drugs, unfair competition in major internet marketplaces, that's a big one, unfair occupational licensing restrictions, big one, unfair tying practices or exclusionary practices in the brokerage or listing of real estate, and any other unfair industry-specific, substantially inhibit competition. So this is literally what the executive order tells Lena to do. We know that Lena and the staff at FTC, right, so not the political appointees, but the staff attorneys at FTC and DOJ have been wanting to go after real estate for at least 10 years. We know that the DOJ walked away from the settlement that they had with NAR because they felt it wasn't going far enough. Because frankly, if we get down to it, the DOJ wanted to go after cooperation and compensation, right? Okay. Lena hasn't been able to do anything because of the deadlock on the FTC, right? And the specific opportunity is it went from 3 Republicans and 3 Democrats to 4 Democrats, 2 Republicans, right? You're right. When the House changes hands in November, because it's going to change hands. Dude, the red wave is real. It's going to change hands, right?
Okay. Right.
You don't really? I mean, I'm not. I'm quoting from Democrats when I say the red wave is coming. The House is going to change hands, right?
Well, I mean, I will say that typically happens, in
a midterm anyway. Yeah,
midterm anyway. Yeah. I don't call that. Whatever.
Okay, that's fine. My point is, if that happens, when it happens, I don't know if it's really going to inhibit the FTC, right? Because that's still the legislature, unless Congress is going to start passing laws, right? Saying, you know what, it's totally fine. This so-called anti-competitive, we're going to legislate that into being okay. Like, they're still going to have a free hand until the end of her term. So unless Lena Khan gets removed from the FTC, and there's zero signs of that happening, I figure she's got 3 years or 2.5, right? She has this order that we think the FTC is going to want to do. Now, having laid all that out, walk me through your logic of how the status quo gets maintained.
First of all, I mean, I think you put the wrong document up. The correct document that you should have shared with the audience would be the previous settlement that the NAR had reached with the DOJ, because I think that definitely is going to go back on the table. Number two is...
Wait, time out. Before you go to number two, why is that going back?
You get to say anything you goddamn want.
You can interrupt me. Dude, it's a conversation. I just want to make sure. Why is that previous settlement coming back on the table?
I just think, it's, it's, I think anytime there's a shift like this, it is going to affect everything. I mean, to say that the DOJ staffers are immune, that is not the case, right? I think they look back at that thing and they say, okay, what can we hold our nose here and get going, right? Not exactly the wording or whatever, but I don't know if it becomes a severe. And this is why. It's just for my second point, right? Is that, and we've talked about this before. My concern, what's going on in a lot of these things, is that we've had such a, typically this market is cyclical, and we have not had a downturn in so long. People forget what it's like, when it turns in from a seller's market to a buyer's market, right? We are making all these decisions based upon this, 9-10 year run up of the market here. And they're all based upon that's the normal, right? And in those cases, you can say, well, multiple offers, what the hell are buyer's agents doing? Blah, 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 right? I mean, that's the narrative that's been going on for so long. There hasn't been that, that typical downswing, which I think we're kind of maybe going into a recession as well. I think when you start looking at things from that lens, maybe there's a softening from the DOJ's administration's perspective on how far they go, because we're going to be in a different environment than we've been. It's just like what we always talk about, where there are agents now that have never seen things not just go up, right? And they don't have any perspective on how to do business in a market where everything is not just going up, or there's some, the interest rates and interest rates going down, like an opposite. This is going to be a wholly different market, and I think that's going to affect the decision making going forward. Okay.
I'm going to respond to that, but let's continue to point two.
Oh, well, that was my point too. Is the different market changing? Yeah.
I think it's actually going to spur the FTC to come down.
Point three.
Yeah.
Point three. I think she's got bigger fish to fry. I mean, the Bloomberg article talks about Amazon, big tech. Those things are social media, everything, are more, I think, in consumers' faces. And if I've got to pick something, right? You're going to look, it's going to be horrendous in the real estate market, if they say, from what they're saying, right? So why would I want to just lump on shit onto that market right now, while it's going through a lot of turmoil with the interest rates and everything, where I can go back to this big tech part and then, okay, that's, still something I think that a lot of consumers are worried about, right? So it's a choice. It's what do I have time to focus on? They can't do everything. They gotta pick some things. And I think we're not that high. The organized real estate is not that high on the list. I appreciate the executive order and what it says, but I think that they've got bigger fish to fry. Sorry.
Okay. No, don't be sorry. Okay. there's a part of me that sincerely hopes you're right. Right. The part that I don't want to see the industry get completely fucked over. You know what I mean? Like, I don't. But I just think it's the other way around, man. I think the housing market doing what it's doing. But here's my rationale. Like, I think it's actually going to make it more likely that the FTC does something in real estate versus what they do in against big tech. Right. Now, first of all, before that, let's just point out, I don't know the staffing levels. I don't know how the internal organizations are. My understanding, generally speaking, is that organizations like that typically have different teams that work on different groups, right? So like they already have a group of lawyers and group of people working on big tech and have had one for years. We know that they have a group of people working on real estate. So to your point, it may be that that they want to do something big with Amazon. What I mean is they have multiple groups, so it's kind of like just because Amazon is heating up doesn't mean they're going to pull talent from the real estate team. Who knows? That could happen, right? We just don't know. I don't know the answer to that, but my understanding generally is that they have different departments, different groups, that go after different industries, so they could kind of do both basically at the same time. But here's my argument where I think they're going to do real estate even more. All right. Number one, Amazon is not an essential necessity. Housing is.
What?
Right.
What? I mean, nowadays, I think a lot of
people. No, seriously. Yeah. But you know what I mean? Like,
you want to pay
you're not going to have
drive to the store? I don't think so.
I'm just saying people are much more worried about food. They're much more worried about gas, and they're much more worried about rent and housing than they are about Alexa, right? Like discretionary. And this is something that came out in recent like retail sales reports. Target, Amazon, Walmart, some of these big retailers are like, our inventory levels are going way up and consumer confidence is super low because of the recession, right? So they're saying they're starting to see less traffic, less discretionary spending because people are spending more of their money for obvious reasons on things like groceries, gas bill, and housing, right? Rents are going up right now like 20 to 25% a year. Right. Housing prices are still going up. I think it's important to point this out. Yeah. People are like, oh my God, housing collapsing. Like prices are still up. Right. We're seeing maybe more, it's not as crazy. Right. As Mike Simon said on Twitter, if you're going 90 miles an hour down the highway and you left your foot off the gas, you're still going really fucking fast. Right. Yeah. It's not like you're going in reverse. And I wrote this big post the other day and talk about I don't actually think home prices drop like ever, but that's a whole complicated monetary discussion.
It's already happening in my
I don't think so, man. I just don't. Like, in other words, we're seeing list prices drop.
Yeah.
Right? But if the homes went up 50% the last 2 years and now you've dropped your list by 10%, is that a price drop?
Yeah, that's a good point. That's a good point.
I don't know. So, but right now, what the data is showing is home prices are still going up year over year. It's just not going up 20%. They're going up 10%, right? But here's why I think the FTC might act on real estate first. Because housing is a much bigger political issue than big tech right now, right? So big tech is a political issue for whom, right? Maybe some of these guys on the right who are talking about cancel culture, maybe some of the I don't know, like some of the super left, socialist types who are like, it's not fair that Jeff Bezos has this monopoly controller. But for the vast like majority of Americans, they care much more about my rent went up 25%. I can't afford to buy a house than they do about Amazon has market power. Do you know what I'm saying? So I think politically, so I've been predicting this for a while. I think we see the FTC move on housing in real estate this year. Not a big one, like we're going to ban commission. I think they do something small, like maybe the no commingling rule, right? That Rex is suing NAR over. Maybe they do something on some small, like you can't claim that your services are free, kind of stuff. Something small. And the reason for it, I think, and I could be completely wrong, you guys, like I've said that from the very beginning, I could be totally wrong. But the rationale is because they want the Democrats who are facing a real tough election, to go out and be able to say, I'm working for you. Like the Democrats are working for you to make housing more affordable, right? And they can point to Lina Khan at the FTC has done this with the president's support, and President Biden has issued an executive order, right, blah, 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 to try and do away with anti-competitive shit in housing. Now, it doesn't have to make that much rational sense, because it's not like realtors going to go out and try and start explaining, well, here's how the no commingling rule actually keeps home prices. So they can't do that. So it's just talking points on TV. I think they do something this year. The second reason why I think that is because if I'm Lina Khan, and I actually have to create some rule and do all that, do I really want to go against Google, Facebook, Amazon?
She made a career. She had a job because she did that. That paper.
She's never gone after him. She's an academic. She's 32 years old. She's an academic. She's never litigated. She's never done that. Would you rather do that or go against NAR and the real estate industry? And I know NAR is a big lobby, but I'm sorry, man. NAR is not Amazon. I don't think like no one's going to disagree. NAR is not Facebook.
Lobbying firm in DC, right? I mean, that's what we hear all the time.
They're the second largest after the Chamber of Commerce.
Okay,
the Chamber of Commerce is first.
Number 2 with the bullet.
Yeah, no, NAR is very powerful lobbying wise. I don't think they have the legal budget that Facebook and Amazon do.
It's more than legal budget. It's the years and decades of relationships that they've had there been on the Hill, right? I mean, Facebook just can't spend a bunch on lawyers. These guys have got, I think Bob Goldberg and his political crew they know where all the bodies are buried.
I totally, man. No, I get it. I'm just saying this is just all that. We're not talking about. That's my question. My question is: this isn't legislation. This isn't Congress. This is FTC, right? So what NAR and Bob Goldberg and all that crew would have to do is walk into Capitol Hill and ask these people they have a relationship with, hey, we need you to pass some legislation to enshrine our practices into law, right? If you're a congressman, if you're a senator and you're facing re-election, would you really want to do that?
Yeah.
With housing being the issue that it is? It's a huge risk, man. It's a big risk.
Let me tell you why you're wrong on these points too, right?
Yeah, absolutely.
Right. So number one is, and I mentioned a little bit of this, but let me reemphasize, is that the news is full of this, of interest rates going up, of housing, just how this is going to affect housing. To me, you don't want to kick them while they're down, right? I mean, what would be the implication of adding we've already got a big shock to that system, right? I think there's just too much of a risk of just doing too much too soon with these guys, right? So the guys that they're like, well, God, there's a lot of turmoil going on in the real estate business. If we hit them with this, who knows what could happen, right? I think there's just a bigger risk now that it's going through such turmoil that maybe gives them more pause. All right, that's number one. Number two is okay. And I know what you're saying about talking points. I get that, because a lot of times there's no substance behind what these guys are saying. The politicians are saying. But would the fact that they're going to have buyers pay their own commission really make an effect on home price appreciation? Come on. That's no, it's not going to be like overnight. Oh my God. Since now buyers are paying their own commission, home prices are going to fucking drop. It's just not going to happen. Right. So you can say these things, and if nothing happens, if things start happening, they're going to think, why did we fucking go through that? Right.
But that's not what they're going to say, right? They're not.
I need as much help as I can to kind of navigate.
That's not what's going to happen, man. You got to think like a politician to some extent, right? It doesn't matter whether you lie. You're not going to go and explain, hey, here's what I'm doing, and it's going to make these guys have to delink and buyer comp. They're not doing that. What they're saying is, these realtors are ripping you off. I'm putting a stop to that. No, and the people that are going to, dude, it's not I'm true, just telling you. I know. Look, it's not about truth. We're talking about what politicians are going to say. We're not talking about what's true or false, right? And all these homeowners who are like, yeah, that's right. Last time I sold a house, I wrote a check for $40,000 to my realtor, right? But here's the thing. These greedy realtors are ripping you off, and I'm going to hold them accountable. It doesn't matter. That's total bullshit.
Hold on. This is a statistic. You're saying that the consumers are going to go start clapping. This is a statistic that every vendor has implanted in their fucking heads everywhere. And I see it in every marketing material. 90% of consumers said they would use the same agent again for their next transaction.
Right.
Okay.
Right.
I mean, a lot of times, whether it's Marge or Brenda, they're happy. They're happy with that experience. They're happy to have that trusted advisor.
So let me get this straight. Fine. No, I get you. Here's the question, right? Then this is very similar to Congress itself, right? Every poll that's ever been done says Congress, the approval rating for Congress as a whole is like 20%, right?
Right.
Nobody likes Congress, whether you're on the left, right, middle, it doesn't matter. Nobody
it's not
thinks
90, correct.
Right? And yet, when you poll them and say, well, how about your congressman? They're like, no, my congressman's fine. My congressman's a good guy, right? I mean, you've seen that stat, right?
Right. Yeah,
okay.
I see what you're saying, yeah.
Because the last time I looked, I mean, you can't claim that realtors are somehow well-respected and people look at realtors like they look firefighters, right?
Well, no, but I mean, they're I think, we talked about this too, this kind of like HGTV things of I'll put these goddamn realtors and flippers in such a high pedestal of like making deals and wearing tight fitting suits and like blah blah blah. I don't know.
I'm just saying, if I'm a politician,
I understand.
I'm not gonna go and insult somebody. Like, look, some realtor like, I'm outraged, and I was like, hey, I don't mean you, sir. I'm sure you're one of the good guys, right? I'm sure you're one of the good guys, but realtors.
No, you're really good at thinking like a politician. You should run for office, Rob. So,
dude, I mean, I had a thing before real estate. I was advising politicians. So, like, I think I understand how their mind works, right? So that's number one. Number two, and this part I think is when you said, the DOJ, FTC, they're going to be like, well, things are really in turmoil. We don't want to kick them while they're down. Are we talking about the same DOJ that is being sued by the National Association of Realtors right now?
Yeah.
Right? So I think it's the exact opposite, man. If you're in a lawsuit and they're like, oh, shit, they're down? Let's go kick them now. Right? Like, I think it's that. It's like, if
NAR have a little bit more public responsibility than that, right? I mean, if they actually think that this is going to cause, that there's a risk that could cause more harm to the public, that would give them some business, bro. Come on.
I wish I had your faith in our rulers, because it's the same group of people who are right now telling the oil and gas companies that it's their patriotic duty to whatever the fuck. Meanwhile, they've been canceling oil leases left, right, and center. They've been denying permits to refineries.
And oil profits are up, and up.
Yeah, they're like, these gross profits. I'm like,
something smells bad in that whole thing. If all the costs are up, how are these guys making so much goddamn money? I mean, who knows?
So that's the same group of people who are going to be like, we're going to do the responsible thing. Like, I'm sorry. I don't really have that faith. In other words, I just assume the worst of our politicians. Right. Yeah. That's just, but then again,
let's circle back here to the beginning a bit over a conversation. So obviously a bloodbath. I don't even want to look at my phone. So I own some of those stocks, right? So I think that's the problem.
But my conviction remains strong, man. I haven't sold any of my stocks because my conviction is strong.
The question is not selling. The question is buying, right? So here's my question. How are we done yet? Is there more blood to be let?
What do you mean by blood to be let?
If we're still looking for lower than, and I'm just talking about the real estate stocks. Yeah. Are they still got room to go down?
Yeah, for sure. For sure. And when the FTC acts, it'll go even lower.
Okay. That's a bit like you're blending things here. Okay. Sure. You're wrong on the FTC. So that's not going to happen. But
okay.
I think I do agree with you. They've got room to go down. And I was reading something about this, and the problem is that it's all about earnings, right? Because they've already kind of put out their earnings, and when they miss their earnings because all this is happening, it's there's still a level to go even lower, right? Which I can't imagine because some of these things are way below their 52-week average, right? So,
yeah.
Not giving any freaking stock advice, but man, it's not looking good for sure.
Yeah, look, we're not financial advisors, but if you're looking at this from a trader's perspective, right? Because I make a huge difference between traders and investors. Okay, I think if you're a trader, you have to expect that the real estate sector is going to get hammered further, right? Because I just don't think the Fed stops at 75 bips. Right. I think their next round, it'll be another 50, another 75. I think mortgages, I think there's a real good chance mortgages hit 10% by the end of this year.
Yeah, that's crazy.
And is it?
Yeah.
So think about this. What's mortgage rate right now? Roughly.
I think 5, 7, 8 or 6.
It's about 6.3 last time I looked. Okay. At 6.3, the bank is still paying you to borrow money.
Right.
So I'm saying any rate that is below 8.6 or below whatever inflation comes in at, the bank is still paying you to borrow money. So people are like, oh my God, it's so expensive. Dude, the bank is still paying you. Okay. What that says to me is the only place where mortgage rates or any rates start to make sense for the lender is when it goes above inflation, where you have real yield. So what's that number? So it comes down to, do you think inflation is going to be dramatically lower? There are economists, there are people who think, and I think the Fed has projected, they think that the CPI towards the end of this year is going to be around 5, right? Okay, if CPI is around 5, then a 6% mortgage rate starts to make some money for the banks, right? I don't think inflation is going to be 5. I think inflation is going to be like 8, 9. There's we could get into that whole conversation.
Even with this last change, you don't think that's going to slow it at all?
I don't think so at all, because I don't think inflation is caused by whatever the fuck aggregate demand shit. I don't. I think it's just supply of money, right? And we haven't done a whole lot on that front. And we can't. There's structural reasons why the Fed has to keep printing.
I thought it was the easement. What do they call that? They were going to start this
quantitative tightening, and
quantitative tightening.
Yeah. But think what is quantitative tightening, right? Quantitative tightening means that the Fed's going to sell bonds, right? Because quantitative easing was when they're going to banks and they said, we're going to buy the bonds, give you money. Easing was buying bonds. So tightening is selling bonds. Okay. Yeah. We just got news like last week when agency MBS, so like Fannie and Freddie mortgage-backed securities went on the market, they were no bid. Nobody wanted to buy them. Okay, so the Fed's going to go out and sell bonds. So these are obviously bonds that they already hold, right? So these are mortgage-backed securities at like 3%. Who the fuck is buying them? So they were like, hey guys, here we are. We're going to offer it for auction. Who's buying them?
Yeah.
Right? The only way you're going to buy them is if the bond price is so low that at the 3%, you're still going to make yield that makes sense. Well, then the true interest rate is going to be like 8 anyway, right? So I'm like, I don't see it happening. Now, it could be dead wrong. Let's bring on an economist, whatever, tell me how I'm completely wrong. But just my gut feeling says I don't think inflation is going to be 5. I think it'll be like 8. And if that's the case, and if mortgage rates really need to be where the bank is no longer paying you to borrow money, then yeah, I mean, 10% rate doesn't seem crazy to me. Right.
Damn. Yeah.
So there's a lot more pain coming, is my point. As the Fed keeps raising rates, a lot more pain coming.
So now, the pain.
If you're a trader.
Yeah. Investors a whole different thing. If you can get, I mean, if you can, nobody can time the market, but it is a good time to start at the bottom. It is, right? Dude, what do they say? So you start to illustrate them when there's blood on the streets, right?
That's right. That's right. So here's how I look at it. Wait, before we go on, the way I look at it is I think I want to make this distinction. Investors, you have to have some investment thesis as to why this company is going to somehow make it, right? So you have to have some conviction around the idea itself. So people who invested in Tesla back in 2011, right? And Tesla's just bleeding money. I mean, talk about losses, like just hemorrhage hundreds of millions of dollars in losses, right? They stuck with it. Why? Because they're like, because we think eventually cars are going to become electric. And Tesla's a leader, so we believe in this company. And so you kind of have to look at real estate stocks the same way, I think. Like, do you believe that Zillow ultimately was going to be the dominant whatever and take I think what it was a projection, like they'll get their $5 billion a year in annual revenues because of whatever, this, that, and the other thing? Do you believe that? If you do, now's a phenomenal buying opportunity, right? If you don't, then get out, right? Right? If you don't, then get out. Traders are different. Traders are trying to say, okay, we're going to buy high, buy low, sell high, and try to time the market and technical analysis and all that. Like, okay, well, that's a different idea, right? So from our standpoint, I think the question is, do we believe in these companies?
Right. So that brings me kind of to a next point here, or next topic, or related, obviously. So we obviously seen with, it started with, Better.com and others in the mortgage industry doing layoffs. And, that just started trickling out to other types of those type of financial institutions. And now this week we saw it kind of go into, I'm going to call them brokers because they are, but, they also have a kind of franchisor kind of vibe to them, right? So my next question is, like, when does this impact the franchisors? Now, franchisors, where I'm talking about the Realogies or Anywhere, whatever they're called.
Yeah.
Is it Anywhere? It's Anywhere, right?
It's Anywhere. Yeah.
They have longer term contracts. There's other ways they make, they're going to feel that if there's any pain, it's probably delayed for them more than like a brokerage, because it's right. They're making money on the market right now. So if we see it go from the mortgage industry down to these brokers, these bigger brokers and then who's next? Are franchisors next? Or I think the ones, I don't think franchisors are next. I think there's that middle thing of, a lot of these portals have switched to a referral model. The Flex program on Zillow, OpCity with Realtor. Yeah. When do portals get affected? And then how does this trickle down? And then, to vendors, to franchisors and vendors. I mean, this is some sort of a waterfall here. And I'm wondering what you're thinking about that process. Is anyone safe? Is anyone safe right now?
So like I said, man, I'm fairly contrarian on a lot of this, right? And none of this is investment advice. And none of this, I'm not even saying this is right. I'm just saying I believe in these things, right? I actually think Redfin and Compass layoffs make sense because they had so many employees, right? Redfin, obviously, with their model. Compass just had huge amounts of staff. I think all of the other quote traditional real estate, so Anywhere, Remax, EXP, I think those guys are going to be just fine. I do. I think they're going to suffer a little bit because of the shift away from consumer buying, right, into more investor buying. And those agents aren't really that well suited for that. All the ancillary businesses likely suffer, like title, mortgage, because again, if we shift away from consumer purchases to more institutional investor purchases, they don't really need those services as much, right? But I think on the whole, I think they're going to be fine because I don't think home prices drop. And I don't even think that the number of transactions necessarily drop that much, right? I don't. Again, I could be I'm a total contrarian on this. I think Opendoor is going to be a ginormous fucking winner. I think by the year end, that we're going to see like a divergence between the rest of the real estate stocks and Opendoor because their business is completely different, right? And their business doesn't give a shit whether the market is up or down. And their business is really well suited to the shift from consumer purchases to investor purchases.
Well, it's kind of, yeah, I totally disagree with you on the whole investor purchase stuff, but okay. But I
tell me why.
See. Well,
let's tackle that. Why do you think it's not going to happen?
No, you know what? This comes up so goddamn often. I just wrote myself an Apple note to kind of because, and what people don't realize is just how small, right, that market is, right? So, let me see if I can get a thing here. It's like less than 1% of homes in America are owned by these kind of institutional investors. Okay. So when you say to me like, oh, they're going to shift to, institutional investors, it's just such a small amount. I don't think that's going to make any big difference. And for them to shift everything to such a less than 1% of the homes that are sold doesn't make any goddamn sense in my head at all. Open Door, good point about Open Door. I think I agree with you there. But the thing with Open Door is that, and I thought the stat was like less than 20%. They buy homes, right? And they are selling them to institutional investors, but it's like less than 20% or 10% of, I think it's less than 20% of the inventory actually goes to institutional investors. So
sure,
they are in that game a bit, but still it's not the majority of their business, right? So it's kind of a hybrid in that sense.
Sure.
Right? So
couple of things to point out here, though.
It's always the goddamn boogeyman in the room, right? 60 Minutes, whatever, and Blackstone or BlackRock, and blah blah blah.
Yeah. So a couple of things to point out. Number one is I know about that stat. The institutional investors are 2% or 1% of them, whatever purchase, and it's overblown. Okay, cool. I don't know about.
I have the quote here. It's the investment firm Blackstone established Invitation Homes, in which BlackRock, a separate investment firm, this is from an Atlantic article, is now investors. Don't yell at me. I didn't name them. Rental home companies own less than 0.5% of all housing.
Okay. The issue there is how they're defining rental companies. How are you defining? Exactly. And I agree with that. That is true. What I'm pointing out is it depends on how you define institutional investor. It does. Because if you define it as any LLC, including family trusts, including, sort of individual, right? It's a much bigger number. So the one thing I do look at is this. What is home ownership rate? Right? If home ownership rate is 64%, that naturally implies 36% of homes are owned by investors. Right? Like that's just a.
Right. I mean, I guess we're going back and forth there. I think there's investors like I own, rental property.
That's
right.
I mean, that's right.
But I'm not an institutional investor.
No, I agree. I'm in agreement. So that's what I'm saying. It depends on how you define institution, right?
Yeah.
My gut sense is when people talk about this 1%, 2%, that they're looking at the larger REITs. I think they're looking at Invitation Homes. I think they're looking at Tricon. I think they're looking at those. They're not looking at the $25 million family trust that owns 10 homes, right? Through a bunch of LLCs. Or I don't think they're looking at that because it's very, very hard to track that.
Okay, let's say you track that. Does that get it to 1%?
Dude, I think it gets us to about 40%.
No, dude. God, no way.
No? No. How do we explain 60% home ownership?
Yeah, I mean,
right?
I got to look at that stat again, but I mean, I don't know. No, I mean,
so that's number one. So this is me to some extent. I don't have the data because how it depends on how you define institutional investor. That's number one. Number two, if you are any kind of investor, let's say you're just a wealthy family, okay, like the Robertsons, right? How's your return from your stock portfolio? Probably not great, right? What's your prospect? When you look ahead, it's like, okay, what's going to happen over the next year? What are you thinking? Every projection I've seen is the stock market is in for like a multi-year bear market, right? If you owned crypto, you're down 90%, right? If you own bonds, you're a moron because you're literally locking in negative yield. So I had this conversation very recently with a guy who owns he's a pretty big investor. He owns 12 homes. And he sold 2 of them because the price is at a high and I lucked out, I got out. So my question to him, because this is something I've been asking on this program, on writing, on social media, is like, okay, great. You sold your home at the height. Okay. You made 40%, whatever returns, fantastic for you. Now that you have this cash, what are you doing with this cash?
Yeah.
Right. And his answer was perfect. He's like, I just have dry powder because I'm going to go buy other real estate. He didn't say, now that I have all this cash, I'm going to put it into the S&P 500. Now I have this cash, I'm going to buy Tesla. He's like, I'm going to buy other real estate, right? I'm like, then you are you're not an investor in real estate necessarily. You're more like a trader in real estate. You're buying low, sell high. Maybe you'll go and you buy some distressed asset.
I mean, I'm sure he kept that house over 5 years. I mean, that wouldn't be a trade.
Right. No, he made money on it. He's very, very smart. My point is, when they get this cash, they're not saying, I'm out of real estate. Right? They're not saying, okay, now that I have this cash, I'm going to put it into Bitcoin. That's not what's happening. He's like, now that I have this cash, I'm just holding it, waiting for the next opportunity to go and buy houses cheaper. Right. My point is, I think if you look across the investment asset classes, unless you're in commodities, and what by commodities I mean, you're a big hedge fund and you're trading in oil, you're trading in natural gas, you're trading in Russian wheat. Chances are the best, most sort of productive, the most attractive asset class is going to be real estate. Why? Because if there's layoffs all over the place, and a lot of these 30-something young families are no longer going to be buyers, they have to be renters. Because homelessness is not an option. Right. So
no, I agree with you. Obviously we're in real estate, so this is not a big surprise.
We know how an amazing asset class this is.
But second, going back to stock market, right? Well, there's another investment thesis you could make, and let's say we go through the next earnings season, right? Your earnings call, and what we just talked about at the beginning, where okay, everybody misses, and there's another drop, right? Because it was based upon the old world, right? Well, you could argue that, a lot of people would say, you know what, they're going to keep the powder dry because they are going to, and again, you can't time the market, but it would be a lot of buying opportunities in the stock market for some depressed stocks. So I think real estate is a good thing, but I think a lot of people argue that the stock market would be a good thing as well.
Possibly. The difference is stock market doesn't generate cash flow, real estate does. Right. In other words, let's say you're totally convinced that real estate is going to bounce right back. So you're just waiting. You're going to hold your powder dry. I'm waiting for Zillow to go to 20. Right. And then when it hits 20, I'm going to back up the truck and I'm going to buy whatever, 1 million shares. Right. Good for you. You can do that. The issue is Zillow doesn't pay dividends. Right. So you're just holding it. You're just betting that the price of that stock will go up. If you do that in real estate, what you can count on is not only do I think the price of this asset is going to appreciate, maybe not at 20% a year, 1%, right? But I could raise rents by 25%.
Yeah, especially if you could buy all cash, right? Because then you'd have to worry about the interest rates and everything else, right? So I mean, we'll see for sure. For sure. I mean, it's an interesting conversation. I mean, I think hopefully people can appreciate the different viewpoints we both bring here, but I don't think we're talking really too doom and gloom. I just think we're trying to make as best as we can about what's going here, and I think there's some positive things and there's negative things.
No, I was just going to point that out. Like, this ultimately ended up being a real hopeful white pill thing. In other words, those of us who are in real estate, I think we should actually recognize real estate is the best asset class left now. Right? That I don't think home prices are going to plummet by 30%. Like, this isn't a bubble back in 2000, right? And I wrote a post about this. Like, it's not. The only real danger that we're facing are political dangers. Things like rent control, things like FTC action. From a market standpoint, I think real estate ends up being the best performing asset class over the next couple of years, right? Because of the whole rental demand, et cetera. The big danger for brokerages specifically and franchises specifically is that they're not yet kind of geared up for that world, right? Because, all the training, the agents themselves, they're about helping consumers buy and sell houses.
Right.
If that starts to shift in a substantial way to helping investors buy and sell houses, some agents are going to do very, very well because that's kind of their specialty. They could go in and talk about cash flows and cap rates and blah, blah, blah. They can do that. And they have a lot of agents are going to need to retrain themselves. They're going to need to retool if they're going to survive. But I think the companies will be fine. So that's ultimately hopeful. Like, Wall Street don't understand real estate. They just think, housing headwind, like, sell everything real estate. Like, hey, you guys are idiots. Like, you don't understand how this is going to play out. So, it's ultimately hopeful.
Yeah. As we wrap up too, I just want to again point out to anybody listening, on vendoralley.com, I've got a link to the Redfin talent list. of those
That's
that were
fantastic.
recently affected by the layoffs. So, use that hopefully for any vendors out there that are hiring. I looked at the list and contact information, previous titles. So a lot of people on there. I'd love to see those guys find a soft landing somewhere. And, for anybody affected, our hearts go out to you guys, and hopefully we can find something in the space that I know we all kind of love and appreciate.
That's right. All right. Hey, thanks for listening, everybody. And thanks, Greg, for, I think people love it when we argue.
Yeah.
They love it. When mommy and daddy argue, they love it. All right, man. Thanks, everyone.
All right. Thanks, everybody.
Ciao.